We start with the markets, as we always do here on NYSE Live. And in fact, today we're focusing on the municipal bond market. NYSE listed BlackRock's municipal bonds business has over $181 billion in assets under management. And joining me now with more is Pat Haskell. He's head of the Municipal Bond Group at BlackRock. Pat, welcome to the show.
Thank you.
Yeah,
glad to be here.
It's great to have you here. What is the state of the muni market right now?
Muni market, from a credit standpoint, is in a fantastic position. We don't have the same over-levered debt situation that you have with the federal government. Now, when I think about munis and why now, we look at real rates. Real rates are over 100 basis points higher than they've been on average since the financial crisis. You take that, you couple that with what's in a supply situation is about 20% higher than that we had in 2024. That's created a lot of cheapness in the back end of the muni curve. So the municipal bond curve is about 100 basis points steeper than that of its taxable equivalent. That's a lot of opportunities. So we're talking about 4.5% to 5% nominal yield. So tax equivalent yields, depending upon your tax bracket, of 8 to 10%. Mm-hmm. So a tremendous amount of opportunity in a really strong credit environment.
Yeah, we do see, of course, the Fed decision scheduled for September 17th. Traders, by and large, pricing in at least a quarter of a percentage point rate cut. What impact could that have?
I think as we've seen since 2022, as we've seen a tremendous amount of money go into money market funds, as the Fed took the plug out of financial repressions of over a decade and raised rates, a tremendous amount of money invested in that front end. It's time for that money to roll out the yield curve. So one of the great traders I worked with early in my career always said, "Don't fight the Fed, buy dips. Don't fight the Fed. The Fed's going to ease, whether it's 100, 125 basis points, 150 basis points between now and the end of 2026. It's time to get these durable forms of income in your portfolios."
Mm-hmm. So when someone is thinking holistically about their portfolio, how would you advise that muni bonds fit into that?
It's your go to sleep at night money. You're going to have some privates, you're going to have some equities, you're going to have fixed income. Your municipal bond is your go to sleep at night money, mm-hmm. right? It's that portion of your portfolio that's going to produce durable forms of income. And it's a portion that you're not going to lose.
Interesting. And so in terms of where we head from here, obviously the Fed decision will have an impact, it sounds like. But what else are you seeing? It's already started
to have. Yeah, I mean, we've the last three sessions, we've rallied over 30 basis points. Definitely people are getting bulled up on the market. I expect that would continue. So we're going to wait to see what happens with CPI. If CPI disappoints for the seventh time in a row, I think people will talk about 50 basis points at start. Whether that's likely or not, we'll see. But I think people are going to continue to get bulled up on the bond market.
Okay, yeah, so I'm glad that you mentioned the inflation report, obviously in focus today, as we mentioned earlier. Part of the Fed's dual mandate, the other portion is jobs. So that jobs report for the month of August showing just 22,000 jobs added. How does that factor in?
Look, the labor situation continues to deteriorate. Obviously, we had the first real disappointment from a headline number this past Friday, but all the underlying labor inputs continue to deteriorate. So this is why I think the Fed's a lock to come in and start to ease rates this week.
What else is on your radar in this space?
In terms of the space, municipal bond space or
yes.
labor market. So, we constantly are trying to figure out, so I mentioned that the credit situation is very strong nationwide. Now, having had said that, and that's because coming out of the pandemic, state and local governments were short about $140 billion, and through a variety of federal programs, there was stimulus of upwards of $300 billion. We try not to go to sleep at that. We constantly looking around the corners to see what is wrong with municipal credit. So we have AI-driven heat maps that follow economic activity nationwide that we can splice by zip code, we can splice by county to constantly look at what potentially could go wrong with credits that we're investing in.
What's the return that you anticipate for this year?
So it's interesting. So munis right now are underperforming broader fixed income by about 400 basis points. So if we could get that back by the first quarter of next year, that would be excellent.
Interesting. And so in terms of what's on your radar, I know you talked about how this space is expected to perform going forward, how it fits into someone's portfolio. For viewers watching, they follow the equity markets every day, right? So what else should they know when it comes to the municipal bond space?
It's interesting because when you said, what do you expect to return? So if you were if you were buying a certain stock, you're putting money in a venture capital fund, you'd say I want a 15, 20% IRR, depending upon what's your risk profile. Most people buy munis for income. So they want to know what is their yield and can they take that home and are they going to get their money back? So what we typically say is like, so 5% high grade New York credit, because we're sitting in New York, right? That's the highest tax bracket. That's a 10% tax equivalent yield, right? So that's most people want to know that they get that yield continuously, and that's a portion of the income in their portfolio. They'll get their equity-like returns here with different products on your floor, or they'll get it in their private portfolio. But they want to know that their capital is preserved in their municipal bond portfolio, and they can maximize their income.
Mm-hmm. Pat Haskell joining us from BlackRock this morning. He's the head of the Municipal Bond Group at BlackRock. Pat, thank you so much for joining.
Thanks for having me. Appreciate it.
Great to have you.